His opinions haven't changed, and neither have the markets, he says. Todd Bubba Horwitz is our guest today. He's the chief market strategist over at the Adam Mesh Trading Group. Thanks so much for being back on the show.
Thanks, Danielle. I'm glad to be back on with you.
Absolutely. Well, Todd, you say you're still a buyer of gold in the face of all this bad news that you're seeing, and you're not the only one. Mark Faber announced that he's still buying gold. So what makes you so loyal to the metal here?
I just think it's the right spot to be here, Daniela. We've got a lot of issues going on throughout the world and throughout the global situation. And overall, I think that gold is a nice asset class. I think everybody should own some gold as part of their overall portfolio.
So, Bubba, you note that gold should really be holding 1100 here and silver 1450. How do you see them set up technically here today?
I think what we're seeing here is we saw a real nice bounce off the original low of 1070, and we found levels 1100, 1140, and 1170. And 1170 looked like it might have been a little toppy, a little bit of a pullback. I think we've pulled back a little bit farther than I thought they should have, but I think 1100 will be a very nice level as an anchor spot here to get back in. I don't see too much risk to the downside, and I see a lot of opportunity upside. Silver, the same thing. We had a nice cover, a nice pullback, and here we are right kind of on the level at 1450 that I think we're going to see that if we're going to get some more industrial need and we're going to have some more production besides it being a precious metal, I think the demand will grow. I think we're seeing some hidden demand that really isn't out there yet. So I think this will be a great level to hold, and I look for this to also work its way higher from here.
Now, you've been saying it for a long time that the Fed will not raise rates this year, but does the last FOMC make the upcoming Friday jobs number more relevant?
In my opinion, the number is irrelevant. The Fed will not raise rates. I really don't care what the number is. The Fed is blowing smoke out of wherever, because at the end of the day, certainly I don't think they want to raise rates right before Christmas because they don't want to see the markets fall. They've been day trading the markets for 5 years. Why would they stop now? Number two, the overall economic situation is brutal, as we can see by the spiking U.S. dollar. We're already having trouble dealing with an overly strong U.S. dollar. If they raise rates, our dollar gets even stronger, and it creates more problems. We got trouble with GDP and everything else. So in my opinion, we're at least 6 to 8 months away from our interest rate rise.
Well, let's wrap with the spike we're seeing in the U.S. dollar. We've also seen the euro pull back a little. So my question for you, Bubba, is could 2016 be the year that we see parity between the U.S. dollar and the euro?
I do believe that is true. I have been calling for parity between the euro and the U.S. dollar for the last about 8 to 12 months. We've seen some very important levels, and the last real hold was at 104, which I believe was in last March. And I believe that next year you will see possibly, and more than likely, the euro currency will invert underneath the U.S. dollar and go back into the 90s. Probably within the next year would be a pretty logical spot.
Bubba, thanks so much for joining us today.
Thank you, Daniela. Great to be here.
And thanks for watching today's edition of the Gold Report. We'll see you tomorrow.